24th, 2022. Happy Wednesday to everybody. Real quick, we'll get started today just by looking at yesterday's trade in the S&Ps. Overall, we're still kind of teetering near the lower bounds of the expected move this week. Market volatility is starting to creep slightly higher as the overall anticipation in the market is looking ahead to the end of week activity and the upcoming Jackson Hole event in regards to Fed discussion and potentially more aggressive hawkish policy being one of the more risky factors for continuation and bullish activity in the market. So S&P kind of feels a bit hesitant at the moment. We've pulled back into value in regards to our volume profile. And overall, the market is awaiting additional information to kind of see a return of either continuation volume back to the upside or potentially another down swipe in regards to our pullback and our correction from the 200-day moving average. So I figured today, instead of looking at a lot of overall metrics that we've been discussing this week, we chip things up a bit. We'll talk about an option methodology and sort of the overall strategy behind targeted option spreads. We'll look at this from a couple of different strategies and we'll kind of build upon them, talking about the pros and cons of each, which allows us to kind of ascertain when and where to use these strategies. And ultimately, they're all potentially successful, but they each have their, positive and negative attributes. So I'd like to do this example with a previous set of price activity. And this is where the S&P started to break out from its balance range. So we had just gotten CPI data. We knew that the market had sort of a breach of this resistant point back in June. And we also cleared some of those levels during the consolidation that we were currently in. We were still in a bullish context, so we were still looking for higher targets. And ultimately, we knew the 200-day was approaching, but the market still had room to those levels. So we're going to assume that during that time, you saw the breakouts, nice strong gap out of a breakaway area. You also saw a target somewhere where you expect the market not necessarily to breach significantly. You want it to get there, and then you want it to either stay close to it or basically get there in a certain amount of time so you can take off your spread profitably. So a couple ways you can approach this, and we'll look at this on the day of the breakout. So this is August 10th of 2022. So for here, I'm going to go into the Analyze tab, kind of delete some of the pre-work that I was doing there. And let's say you see the breakout. You want to give this about a week to play out. You think the market's going to rally towards that 200-day. And because we're in August 10th, we can be looking at something like the August 17th series or possibly just the Friday series. I'll go ahead and use the Friday series for this example. And of course, it's just going to be a little different in the pricing and the overall profitability. So market during this time, let's set ourselves up with the right date. So we'll put the 10th. So the market's trading at about 420. We had just broken out. So our at the money premium right now is that 420 call. And one of the simplest things you can do is say, okay, I'm bullish the market. I see a breakout. I want to have some long exposure in the option market. And there's plenty of ways to do that in a very simple spread, which is really just a single contract. And that would be something as simple as buying a 420 call, looking for the market to advance. Now, because we know the future, we know that this is a very profitable strategy because as we move into, let's say, 2 days prior to the test of the 200-day moving average, this option contract has gone up in value. You notice that we paid about $420 for that particular contract, kind of in line with the actual strike. And of course, because the market moved higher and volatility didn't necessarily drop significantly, this roughly maybe went up about 75%. So excellent trade. Overall, if you're just looking for the market to go higher very quickly, you often want to be looking for things like range breakouts, which are very explosive moves. You want to be looking maybe for some compression into expansion, or you just want to have a trending market where buying low into a pullback and selling high into the expansion is the strategy. So any of those are viable structures and technical ideas for the market. One thing that's a little interesting about this is it's very expensive. So obviously we knew the future. If the market had stalled or not necessarily gone up very quickly, let's say the market only went up a couple of dollars, this might have still been able to exit profitably, but you're risking a full $425 per contract. So somewhat expensive to put on as a trade. And ultimately, there's one scenario where this trade works, and that's where the market is going up very quickly into some higher prices, really with no target, because the higher the market goes, the better this trade performs, and you just have a certain amount of time to allow that to happen. So in this case, profitable, but obviously with its detriment and its cons, which is we know the future and the market moved up very quickly. So it was the perfect scenario for this. Now, let's say you're not willing to pay $425 for this spread. Maybe your account doesn't warrant it. Maybe you're not willing to take that much risk. It's not within your risk metrics to accept that full premium. You can manage it, of course. You can sell it maybe if the market is not advancing, or if you start to lose too much of that premium, you could sell it maybe at half cost just to lock in the loss before the full contract expires. Another thing you can do is you can sell. And this is, of course, our vertical approach, where let's say we're going back to the S&P. We look at the chart and we say, okay, I have a breakout and I don't really have resistance anywhere, at least horizontally, until about 429. So next sort of range of resistance is 429, 430-ish. And I also have that 200-day and the sloping resistance. So obviously this is a big area of structural resistances in multiple different facets. And therefore I want to be cautious of trying to go higher than that price. Well, for that, you can, of course, go right to your 430s. You can say, okay, I'm not willing to spend $425 for this spread, but by selling a 430, I can bring my cost down. So what I've done is I've opened up a $10 wide vertical in the S&P, and the overall target that I'm trying to get to is about 430. So I've decided to sell that particular strike. Once again, this doesn't necessarily reduce costs significantly because you are selling pretty far out in price. You'll notice that, make sure this is always locked to, just making sure the pricing here is correct. I don't want to adjust things to make sure that I'm pricing it correctly. You'll notice a few things about this. One, it's still somewhat expensive. I mean, 330 versus 420, you're cutting off about 90 bucks, and that's exactly what you're selling. You're selling about a $90 contract further out in price. You'll also notice that this is right outside of the expected move. So if the market is at 420, and during this time, a $10 move is priced into the market, then this is kind of where the risk of the market starts to drop off. And this is where you're getting outside of a single standard deviation of movement. So Some things you can do inside of the expected move is, let's say you're willing to take this risk, you might want to consider coming in a bit, because if 430 is your target and you're willing to accept this trade up to 430, you might want to come in a little bit, maybe to like 425. Now, this is obviously a shorter vertical, so you only have a $5 wide vertical. It's also going to cost you still about $212 per spread. So you're not able to make as much even if the market exceeds 425. You know, $5 wide, the max you can profit is $500 and you're paying 212. You compare that to a $10 wide where you're able to make 1,000 and you're paying about 330, I think was our pricing. The difference in that percentage of the amount you pay versus the amount you make is obviously very different. But what's keen about this is if the market exceeds 425, which you do expect it to do, your target is a little bit higher, then ultimately this can go intrinsic a little bit faster. And that allows you to potentially take this off early, along with hitting some of that maximum profitability before expiration. Usually in a vertical, you want these things to both be intrinsic, and you ideally want them to go past that specific target to realize the most amount of that potential profit that is baked into the vertical itself. So for these, you know, it depends on what you're willing to pay. It also depends on where you're willing to go in the market. So if you have a clear target, it's okay to sell near that target so long as the market is paying you well to close off your call or your put vertical, basically to cap the upside. If they're not, or if the market is not necessarily priced with that volatility structure very well, you can come in a little bit, basically inside of your standard deviation range. And therefore, those verticals, if you achieve your target, will go intrinsic a little bit faster and therefore realize more of their potential profit. Another thing to note here is that if you want the potential to basically make 1,000 and, you know, pay for minus what you pay for, you simply can open more of these. So this is two $5 wides, which has a maximum profitability of 1,000. The issue is that you're going to pay a little bit more. Instead of paying a 330, you're going to be paying about let's say 30 in this case, so an extra $100 for the same potential to make 1,000 maximum. And once again, the pro and con here is that these will go intrinsic past 425. Something like a 420, 430 will go intrinsic at 430. So it takes more effort for a wider vertical, in this case, to go into the intrinsic for both contracts. Little bit of a pro and con. There really is no exact way to know because you don't really know the future here. But what you're saying is, I have a target and I'm willing to either sell at target or I'm willing to sell in and allow for that target to basically expand my vertical if we get there. Each, of course, with their own payment. So this is the vertical approach. You're basically adding one more contract. So you're now buying a call and you're selling a call. Let's look at this in profitability. So, you know, similar to the call, you made about 75% of what you paid. We're going to go to the 17th. The market was trading here at about 426. So these 425s have gone intrinsic. You'll notice that I can sell them now for $4 a piece. I opened them up for $2. So I'm able to actually close these for 100% profit, roughly. I'll say 90% profit just to account for the cents. Pretty quickly, you know, as soon as these go over 425, and the fact that they're a little bit of a shorter dated vertical, we're able to realize that very quickly once we go into the intrinsic. You compare that to the 430, where we're not intrinsic yet, and this is still very profitable. The spread is still expanding appropriately, because remember, this was about a $3.30 vertical. I can sell these now for about $6.49. But ultimately, it depends on when you're looking to take profit and if you truly believe that the target will be achieved. Sometimes it can be more beneficial to bring those verticals in slightly. So that's the vertical approach. We're going to go one step further. Let's say now, I'm going to bring this back to our 810. Let's reset here at about 810. So now I'm looking at the 19th of August. Now I'm saying, okay, I believe 430 is going to be achieved, and I'm so confident that not only that it's going to be achieved, but it's not going to go much further than that. That 200-day is going to be a major resistance. We'll get there, but then the market's going to immediately pull in and probably consolidate for a couple days, but no way is it going past it. That's your thesis going into the trade. Imagine selling more than one of these 430s. Because remember, your objective here by selling the 430 is to bring your cost basis down. So the more you sell at 430, assuming we haven't added any other contracts yet, the more this trade goes down in the initial cost. And this is appropriate because you own a 420, it's closer to an at the money call. You've sold a 430, you've made it a vertical, you sell another 430, now it's a back ratio. This is a 1/2 back ratio where you're owning close to intrinsic or at the money premium in this particular example, and you're selling out of the money or extrinsic premium to pay for the trade. What's the pro and con of this one? Well, obviously, the more I sell, the lower this debit goes. In fact, depending on how confident I am, I can sell as many of these as I want, to the point where this trade can only cost about 50 cents to open. If I'm willing to take 3 430 contracts and sell them basically naked at 430, I can bring this trade down to about as cheap as I want it to be, and I can even start collecting credit. You know, the more I sell, this will actually go into a credit spread because I'm selling more premium than I am buying back with the 420s. So ratios are as wide and as risky as you want them to be. What's the issue with this problem or with this spread? Where all of your risk lies is in two areas. One, if the market decides to go down, then you basically start to lose what you paid for, but you brought your costs down, so it is costing you less than buying a call. It's also costing you less than opening the verticals, you know, depending on the risk profile of the vertical. So if you're wrong about direction, the back ratio is good to just keep your costs down. The other risk to this is, let's say the market does break through 430. You've sold some naked calls up there. So depending on how far that market goes, and if it doesn't pull in, you know, close to or at expiration, you're going to start to realize unlimited upside risks because those naked 430 calls are not protected. They're basically uncapped. And in this example, I have sort of an extreme, but we can bring that back down to a 1/2. And we can simply say that this is both a vertical, you know, your 1/1 here, that's going to be your about 330 debit. And then by adding that additional call, that call can easily go intrinsic if the market breaks 430, and that'll start to act as if, you know, you're exposed by a certain amount of delta to the upside. Which will obviously start to hurt depending on how far the market goes. Now, in this case, your 420, 430 is still also protecting some of that uncapped risk. But just to show that structure, I'll kind of pretend like I'm doing the same idea on the current market. So these will be different prices and just a different structure here, but I'll just do a 1x2 here, and I'll go ahead and analyze this trade. You want to look at the risk profile here, because really what you're looking at is a certain area of the market. Let's see if I can zoom this in real quick. This one always gives me a little trouble when I'm trying to zoom in too quickly. Okay. So you're looking at an area of the market where your target is still where you sold the premium. You want the market to get to 430. In this example, it's 423. And it's almost like a butterfly. There is a point at which you're going to realize max profit, because your vertical is fully intrinsic and the sold call is also not in the money. That point is where your maximum risk and therefore your maximum profit is. Once you exceed that, there's still a point in time and price where you can exit this profitably. There's still profitability past your inflection point. But as soon as you get past roughly what you paid for in debit, that's about where the risk of the naked call comes into play. And you can see that the farther you let this go, the worse it gets. So ratios are great for a couple of reasons. One, if you know that the market has a very ideal area, let me go back to think back, that it's going to stall, that's where you want to put that risk. You also want to manage it. So if we do exceed, or if we kind of hit that target, you can just take it off. It might not be at full profitability, but really you don't want to take too much additional risk if you've got maybe the resistance wrong, or you can't necessarily take any further expansion past that point. So just like everything, positive is it's starting to get cheaper to open. You also have very similar profitability zones, roughly around 430. The con here is that if it goes past 430, unlike a vertical, you can't just leave it. It has to be taken off, or it has to be managed at some point, capped off, or possibly just taken off as profit, as it starts to exceed. So very similar ideas, but you have to do different management styles. So how can you prepare for that ahead of time? Let's say you don't want to manage it. Maybe you just want to put this trade on and say, okay, it's an if-then scenario. If we go to this price, that's where I want it to be. But I also don't necessarily have the time or the experience to manage it if we start to exceed. In this case, what you can do is simply cap off that risk. And just like we did with buying a vertical, we're going to go ahead and sell a vertical against our ratio. Now, for those who have maybe seen butterfly constructions, this should be very similar, because a butterfly, no matter the spread width on either wing, is what we're about to do. We're taking a back ratio, or really we're taking a vertical, and then we're flipping it around the same inflection point. So in our case, if I wanted an even butterfly, I could cap this off at 440. So that creates a butterfly. I have a 420 long, two 430s sold, and then a 440 bought. That's a $10 wide butterfly with all of the premium and profitability centered at 430. Nothing wrong with this. It's just one of those spreads that takes a lot of accuracy to get full profitability. And really, this has to be held close to expiration to realize a lot of those potential profits. As the market goes into that level, you want time decay to actually facilitate the spread. And we can look at that, just from the perspective of what is the profit. If we get there on maybe like 2 days prior, this did expand as well. It went from about a 230 debit to a 530. So it's a very profitable spread. Once again, though, we knew the future, and this target was achieved pretty much around this date. So we not only got the target right, but we got the date right pretty well on this one. One other way to do this, and I'll have to delete the spread here, is let's say you don't want the evenness of a butterfly. You actually still want that ratio aspect. You just want to cap off your risk. In this way, you're going to sell 2 of your 430s, and here you're going to buy back a 435. This is still a butterfly. It's going to be labeled as a butterfly. It's just not an even butterfly. The wings are slightly different widths. And what you'll notice here is that you're not going to be necessarily paying the same amounts as an even butterfly, but you also recognize that if the market goes past 430, getting to 435 is almost equivalent to getting to 440. You don't expect it to go $5, so why would you expect it to go 10? And therefore, you can bring in the second leg of the butterfly a little closer to the price. Usually, what this allows you to do is sell a slightly higher premium. 435s, I collect 37 cents. 440s, I only collected 14 cents. And I'm still capping off my topside risk. Now, last but not least, only a couple minutes left. Let's say you want to get a little fancy with this. This is one of my preferred spread ideas for targeted trades. It's a little bit of a longer legged strategy, but it has a lot of benefits if you're able to sort of maneuver around some of the pricing. So let's say you open a 420. We're going to do the same example. We're now going to sell 2 430s. We're going to add 1 more to it. So now I have a 1/3, still a back ratio. We've gone through this example prior. Now let's also say that you don't want to take the risk. I need to cap off 2 sold calls. So I need to buy back 2 435s. Once again, this will be labeled as a butterfly, but really it's a very specific 1-3-2 kind of construction. You're opening a vertical, a 420 by 430. You're selling 2 additional 430s at your target because you believe the market's going to get there, but you don't believe it's going to go much further. And then you're capping off that risk by buying back very cheap out of the money premium. With these spreads, once again, this will still cost you about $220. But if you start to play with the pricing, maybe looking at going slightly extrinsic with your open calls. So now I have a 423. You can severely bring this debit down to the point where if the market doesn't go anywhere or doesn't go very quickly in your favor, you're not really paying a lot for this spread. But the potential of this spread, especially as you get to your target on expansion, is phenomenal. And here we'll look and see, okay, this went from about an 80-cent spread to about a $2 spread. That's a very significant, payment versus reward. And once again, the closer this gets to expiration, let me get that down to 18, the wider this can expand. That went from about $2 to $3. Thinking about how much you paid and the same basic risk profiles, the market doesn't go anywhere. If the market goes kind of into those areas, this will start to grow in premium, but you've also capped off that risk. You don't think it's going to go much further than 430. So as I'm kind of wrapping up here, think about these strategies when playing in the option world, and these are targeted strategies. They have very specific utility. The construction of them is important. The risk management is also important. And not everyone is going to be the winner or the best approach for every single trade. But a lot of the time they have similar ideas, and they often are going to have different ways to kind of manage your risk and manage the cost, which is the benefit of the option market. So with all that said, my name is Jared. Ran out of time there. So stay tuned for pre-market prep. We'll talk a little bit more about this tomorrow. Hopefully this was helpful for those looking for ideas to trade. So trade safe. We'll talk more then.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope you're having an amazing morning. Hopefully, you guys had an incredible day yesterday. Good morning, Norm. How you doing today, brother?
Good morning, buddy. I'm doing all right.
Good, man.
How are
Glad to hear
you?
that.
Sorry, I'm a little. I just got in a trade like I
Nice.
don't know,
What are you,
20
my
seconds
friend?
ago. Piton. So
Pita.
news just broke on that.
Very nice.
News just broke on that they're going to be selling equipment on Amazon.
Mm,
Got a huge short float on it, so I thought I'd give it a shot.
yeah,
It,
yeah. Good pop right now
it
from
did. I thought
1150.
it had a larger short float. Maybe I messed that up, but it's not.
Yeah,
It did. It doesn't anymore.
yeah,
Anyway,
yeah.
it's working out so far, but we'll see.
Good, man. Good. It's funny. I was talking with Hamish earlier today in chat. One of our members does a lot
Hamish.
for us. Hamish, yes, Hamish. Excuse me. And as we were talking about how tickers with news during this time where things are don't move well, like the market hasn't been great, right? Tickers that have a catalyst do very well during this time. We saw Oxy yesterday do that. Oxy traded very well yesterday. They had a catalyst, and there were some other ones too that did, and the ones that did not, like for example, Apple or I know Dix, they have news, and some of our other favorite ones, traded very choppy. So looking for things to have catalysts when the market is dead like this, slow volume based on, we know this time frame during the year is tough. It's not the best, right, for day trading. It can be a nice edge to have. So be on the lookout for that. Maybe
Yeah.
more a little more picky on the tickers. Talking about yesterday, let's look at some of the stuff we have. XBEV was another one that did have a catalyst, had a very nice drop, guys. Started to do that right at the pre-market, and then you can see the nice drop there all the way down to 1840 from 20. That is a beautiful drop. A little tough to get in for a 5 minute, which is what I look for because it did seem very extended at that point. But if you had a 1 minute or if you had any kind of breakout of 1950, which was the low of the pre-market, which is an amazing strategy. I find that to work very well. You can see how well that did there. They recover nicely back to the VWAP and some moving averages, and then sold off again for the rest of the day. So XPEV trading very well. We have not seen it trade that clean in a while. Zoom, I expected this action from Zoom because although they are in play and they had a catalyst, they tend to trade a little bit on the choppier side. And we saw that yesterday here. The entire morning, just a little bit tough. And not only looking at it now after the fact, I was looking at the price section at the moment, and it's just a tough trade. It is not an easy one to trade there. Did break down finally, going back to back red here, all the way down to 82 to 45. This was nice, but the morning was a little tough there. And then some more downside later in the day. Twitter was funky. It just didn't know what it wanted to do here. Did give you a nice short at off 42, a level that we had. I believe that's what was from our day. That was not a high of the pre-market because it was all the way up here. I believe that was a good daily level. So it got toppy there, and then you can see a nice drop going back down to some other daily levels we had. We had the low of the pre-market, and we had a daily level down at 39, 87, I believe, and it came right to that at the close. So that was nice to see. Apple was just messy, really all over the place. When you see this type of action, it kind of tells you, just a lot of indecision, not great activity. Like for example, this pop here is great, but then look at the drop, comes back right back to the opening of this candle. So what do you do here? Do you take a short? Do you go back long? You just don't know what to expect when it's trading like this. So a little bit tough trader yesterday. Oxy was unbelievable. This thing just again just on fire. Took off here, never really looked back. No pullbacks in the 5 minute at all. Did rest a little bit here and then continue pushing higher. So again, they had a great catalyst yesterday. And we'll see what they do today. I don't think they'll be in play as much, but I'll tell you this: their volume this morning is better than we've seen in other days where they traded well. It's 456, so that could be interesting. And then Dix, no surprise here. This thing can be very choppy, and then we saw it there at the open and throughout the entire day. It's just not much happening, but that's typical for this ticker. All right, that is what we had yesterday, guys. Again, not the best day, but there were some really good ones. The ones that did trade it well traded awesome. So if you were able to catch any of those, like congrats. Hope you had a great day. On our list today, leading the way, guys. BBBY. We'll get to what's going on there on the gap upside. A couple other names here that are in the meme territory. So AMC, GameStop, we'll look at those. And then a couple down in our gap down list as we see some retailers like Nordstrom is on here. We have Indo, which was a tricky one to trade. We'll dissect that in a bit. Before we do that, let's take a look at the overall market and what's going on there, Norm.
Yeah, I mean, we've had a pretty rough couple of days in the overall markets, Friday to now, essentially. Just a little bit more recession fears and inflation fears. Neil Kashkari spoke yesterday. He's the Minneapolis Fed president, and he really said some stuff that was concerning about inflation and his worries about inflation. So it's it's out there. It's coming back. That kind of stuff eased a little bit when we saw the numbers, ease back a little bit, and core inflation been going down for a few months, but it's seeping back in. We've got Jackson Hole at the end of the week, the symposium. I believe it starts today, and then Jerome Powell will be talking on Friday. 8:30, we had durable goods and core capital equipment orders numbers come out, pending home sales at 10 a.m. So there you go.
All right, we'll see how that reacts, how the market reacts to that. Let's get to it, guys. Let's take a look at our gappers list this morning. We're going to Control A, Control X this out of here. Control A, Control X. Oh, there we go. And clear up our list here if it wants to act nice. I don't know why it does that sometimes. Control A, Control X. It just acts funky. We'll do it the old school way. Shift and we'll do that. There we go. Okay, so let's take a look here at BBBY leading the way this morning, up 26%. Again, just got to be careful with this thing. It's just messy. So it's gapping up here, 16 million shares traded. It is definitely in play. So we will have it on our list. Any news aside from just memeing, Norm, on this?
Yeah, actually there is. So they're exploring some debt financing to help get their balance sheet correct. That came out this morning. So we'll see how it goes.
Right.
Should be it's in play. That's for sure.
Yeah. So definitely in play there. We'll take a look at that one. We have TRQ. What is this here? This is up 23%. The ticker sounds familiar, but I'm not 100% sure. Doesn't look great though. Right now,
It's a
220,000.
copper miner based in Canada.
Yeah. Okay. Yeah. So this is not good. I mean, I know it's active here now, guys, but just be very
It
careful.
is active.
On this one.
I don't exactly know. It just popped up, I think, a few minutes ago.
Yeah, I didn't see it earlier on this list, so volume coming in now. We'll give it a second. We'll come back to it. FTCH.
Maybe.
Yeah.
Yeah. Nothing. I was just going to say maybe it turns into something, but who knows?
Yeah. Depending on what the catalyst will be, right? If it's a good one. FTCH. This is in play, guys. Up 18%, 1.3 million shares traded. I know this ticker well because I don't trade it good at all. It's a horrible ticker for me as far as day trading. But it's up nicely, 18%. So we'll put it on here. Earnings, Norm, on this, or?
No, they're acquiring somebody, and I you know what? I agree with you. I agree with you 100% that it trades like garbage. So frankly, I didn't dig into it too terribly much, but I believe they're acquiring a company from another just a retail brand, and I'm not familiar with it. I don't know what YNAP is.
Yeah, I've never heard of that. But yeah, these guys, I mean, they're just, at least I have not had any luck with them at all. So we'll put them on here because they are in play. You know, they got 1.4, 18, up 18%. Maybe today they could do something different than they have not done in the past. We will see. Nerve, NERV this morning, that up 16%, 722,000. Looks like a horrible ticker, low flow stock. So we're going to treat it a little bit different. But yeah, not looking great right now. This day
Biotech on news of schizophrenia treatment. So who knows? But like you said, it doesn't. It's not looking great.
Yeah. These biotech catalysts, man, they're so weird at times. You get a lot of this, the pop up and then the sell down, right? So be careful if you're going to be watching this one. I don't like this one at all, even if it gets volume. Just don't like the catalyst on it and everything else happening there. TTCF, horrible, no action really. Let's move on down to SoFi. This morning they're active, 8.1 million, up 8.3% at the moment. put as a possible. We'll come back to this and see what's happening there. Piton in play for sure. My man Norm's already taking a trade on this one. So add Piton to the list. 2.1 million shares traded. It is up 7% in the news here, as Norm mentioned, possibly selling on Amazon. So that's going to be, can give them a new audience to probably sell these things to.
I'm curious, this one thing about this ticker, especially when the price just kept coming down from, you remember this damn thing in the peak of COVID hysteria was trading 165-ish.
Yeah, it was up there.
And now we're at $12, and that's a big pop to get to $12. So, people kept thinking somebody was going to take this company over, and they kind of gave up on that. But I'm not sure that. And Amazon was
one of them,
spoken about as one of those possible suitors. Makes me wonder if that talk doesn't start back up at some point on this.
Yeah. I mean, them selling into Amazon could be a sign, hey, of something happening, but who knows? But either way, this is great news for them. I don't know if it's going to help them a whole lot as far as
the other concern I have is, does this hit their margins? Yes, that maybe maybe there's some benefit to selling on Amazon, but will it hit their margins?
Right.
And will that do anything?
Yeah. Correct. So again, anything tied into Amazon is going to have an initial pop. We'll see in a couple of days, or maybe not right away, how this is actually going to help them, their bottom line. ENVX here, this ticker up 3.6, no volume. We'll move on to two of our meme stocks here, GameStop and AMC. GameStop right now, really light volume, so this is not really in play. BBBY is the one really in play at the moment. This is dead for now, unless we can get the apes to get this going. AMC right now down up 2.6, 1.7. They do have volume, and they have not been having fun since this was Tuesday. No, this was Monday. Monday start off the week with a nice gap down and sold off yesterday. And today we are just kind of figuring out what's next. So we'll see. They got the volume. This is more of a possible. It can be a good scalping opportunity if they can get a squeeze going here. But for the most part right now, it's pretty much untradeable if it stays like this. SHW, nothing happening here. Looks like a block trade. So yeah, that's dead. All right, let's see what's gapping down today. We have Nordstrom leading the way here, down 13.4. Again, big drop for them. And the only time we see these guys is when they have a catalyst. And Norm, obviously, that catalyst not treating them well this morning.
No, retail earnings out. Like many of these that we've heard, they've got a glut of inventory, and the consumer not spending. Because they're calling inflation concerns. So
yeah, absolutely. I like where they're sitting here on the daily, guys. They got a nice level of support. And we just have to see, sometimes these plays, when they drop this much, it could be a overreaction. They might be a pop here. We'll have to see. But I don't have big hopes for it because just Nordstrom doesn't trade very well at all. But we'll know more at the market open and after the bell. Here is Wolf, and then this is Petco. And at the moment, they are down 6.6. Another one that, again, doesn't get great volume, so doesn't trade very well. But let's see what happens. Let's see if Wolf can get some barks going in here. We'll put that on there. Here's Indo, 3.7 million shares flow. This thing is just, you got to be very careful, guys. Extremely careful. Andrew had an incredible trade on this one. On his webinar, he was showing this. Not Andrew. Andrew was showing a trade from NAS that he took on this trade. A very, very nice trade here on the breakout. So again, great for scalping. But he did get stopped out once. And if you looked at that webinar, if you missed it, you can catch the recording. You know how quickly he got out. You got to be very quickly in your decisions because this thing can move, obviously very aggressive. And Nas obviously has a lot of experience, right? So you got to be experienced to be trading these low flow stocks, guys. Very, very careful. We can't say that enough. I know you must have heard this like probably 150 times from Norm and I, but we hear the stories of people that end up blowing their account because they go for the good looking numbers on as far as percentage and as far as something can move and how much you can make. When you get caught on the wrong side of things, it can be brutal. Here's Rio here down 3.1, and I do not like the way this thing trades at all. I don't think it's a good one here. So we will stop there. Norm, I know Piton is on your list for sure. Well, it's on your montage. It's on your trade this morning. Well, anything else that you like so far?
I'm still looking. I want to filter through these because, frankly, a lot of these aren't too great. I
Yeah.
want to see how the morning
Yep.
pans out a little bit closer to the open.
Agree. And you can see that here on our list. We have three only that look really great, and two of these, you just can't tell at times. But we will see how things develop. Let's take a look here on what we have going on. We start with Amit. Amit, you're giving us Nvidia and Tesla. Let's take a look. HVIDIA, no, Nvidia. There we go. So Nvidia right now, they have earnings tonight. So tonight they'll definitely be in play. Probably Ed will be trading this if he's going to be doing so. And tomorrow I think will be in play. We'll see how this thing gaps down. Sitting nicely on the daily here. You don't have great volume this morning at the moment, right? Only 248, which is very light for Nvidia. So I don't know if they're going to do anything. Still worth keeping it possible. See if there's any kind of movement leading up to earnings this evening. But for the most part, right now, there's not much going on. Tesla, pretty quiet as well, 340, not up by much. There's not a whole lot of movement happening here. They got a great daily though, just kind of hugging this previous day close line there. So that's interesting. Maybe we can go back to 937 if the market's going to help it do that. So, but again, not a whole lot happening at the moment. Oxy, amazing day yesterday. And I don't know, I think Oxy might be in play today again, guys, because the volume that I'm seeing pre-market here is higher than usual. So 500,000 up 1.2 after a couple of really crazy days here towards the upside. So yeah, I think Oxy is worth taking a look at. Lucio, you're also giving us XLE. And again, this is more of this ETF for the SPY. So you can look at this. You can look at the SPY. You can look at the Qs. It's a bunch of things you can look at to take advantage of this, right? You can look at the SQQs and the TQQs and whatever, all that good stuff. So we do trade that in the chat room as well. Andrew does quite a bit of that, Brian, and other moderators also. Let's take a look at Simon Drug. More. Oh, no. This is this is on drugs. To put it that way.
Sounded like you need
Yeah.
some stomach medication or something.
Yeah. So this is this is no good, guys. I mean, it's a penny stock, more of a penny stock trying to break out of $1, $2 here. Just the way we trade, this is not going to be a good one for that, Simon. So it is in play. The volume is there. It had a couple of really nice pops in the last week of trading, so you can see that there. But this is just not going to fall under my criteria of things.
Also
to
low
watch.
float.
Oh, I didn't even look at the flow. What is the float on this?
6.3 on FinViz.
Yeah, so be very, very careful, guys. MRO was up with Oxy yesterday as well. I know Jared was looking at this one. It was MRO and another one that moves with Oxy too. I forget the ticker's name. APA. That Jared was talking about. We were talking with Jared
Apache.
about this yesterday. Yeah. So this one here also can move, and so you can watch either one of these. I like Oxy. Oxy can move well, but these are some other ones you can look at as well. All right. What else we have? Disney.
Not much volume today. I mean, that might change. I see what he's talking about on the daily, but
yeah. Closing this gap slowly, not quickly, but definitely closing that gap that gap up that we had, but not a lot happening. We'll have to wait for the market open to kind of see where that's going to go. And again, as the market's been kind of pulling back a little bit, you have some of these tickers that have gapped up or shot up, kind of pulling back as well. I don't think Disney has their own news neither, right? They don't have their own catalyst. It's just overall
I can't imagine they would. They haven't even traded 15,000 shares this morning.
Yeah. Bank of America, 67,000. Yeah, again, just another ticker that doesn't move very well, even when they have a catalyst. It has to be a really strong market or sector catalyst for it to move. And I don't see that today. So that won't be on my list as of now, Melvin, because of that. CRM, this is Salesforce, right? Salesforce has earnings tonight as well. Again, quiet, dead right now, guys. 11,000 shares traded so far. So tonight will be in play at earnings, and then tomorrow maybe, because they're still not a great intraday trading stock. I traded them handful of times, and haven't touched them after that. Here's Twitter. Twitter could be fun. It had a nice sell-off yesterday. Yeah, Twitter could be one that can do something today. Maybe a possible. Doesn't have the volume as it did yesterday. If you remember yesterday, we were in 1 point something already. So it doesn't have that volume today. But let's see. Let's see. We're sitting at a good level at the moment after a nice drop yesterday. Let's see if it does anything. Okay, I think we are all set. Richard, you're giving us quite a few here. I'm just going to take your first two. STBX. This is a recent IPO that opened up yesterday, right? So again, not a whole lot to go by here. You don't have shares for sure. It's going below their opening price that day yesterday. Their opening, not their IPO opening price, opening price on the candle. TCF. No. Let's try another one. No, that's no good. That is all over the place. No volume. INTU. Okay. Not sure how you're picking up these tickers, but if you look at the volume, it's just nothing happening here, Richard. This is why I'm not going to put this on our list. If you look at the ones we're keeping on our list, they have a lot of volume. There's some movement here. These ones are not doing a whole lot. Not mean that they cannot be great after the bell, but
They had earnings yesterday, so
who did?
into it right here that you
into? Oh yeah, okay, okay.
that you had pulled up. That having been said, it's not even traded 10,000. We need volume.
Yeah, I don't think nobody cares too much about I into here. So yeah,
Got a
not
good
gonna be
gap,
good
just got no volume.
Yeah, yeah. All right, guys, let's stop here. Let's take a look at our community events and announcements, and we'll come back and fine tune this list. And then we'll look at our usual suspects too: Apple, Nvidia, and AMD, and all that good stuff. So let me go over here. I was looking at my looking at trading terminal, looking at the calendar as we're kind of toward the tail end of earnings. So guys can always come over, check tradingterminal.com, and you can see the earnings are coming up here. So we got a couple of names here, Neo, and some other ones that are going to be coming up soon. But let's get over to our chat. To our website, bearwithtraders.com, and that's not bearwithtraders.com. Let's go over here. That's Untitled Brokers. Yeah, don't log in there.
All right. And you can check this out anytime. Just go to bearbulltraders.com/webinars or click webinars in the nav bar at the top. Every Monday night, 8 p.m. Eastern, you've got onboarding and technology with Carlos. That is open to all membership categories. So you can head over there, check that out, and get your feet wet with Bear Bull Traders. For strategy, last night, Andrew's webinar should be posted soon if it's not already. And then next Tuesday, 8 p.m., Mike will be talking about finding the right strategy for yourself. Following week will be John talking about fundamentals of profit taking and strategies for deciding where to take profit and such. Wednesdays for psychology. Tonight, we've got Mike talking about creating a psychology journal. And then next week, overcoming fear, both at 8 p.m. Eastern. Thursday, we've got mentoring with John at 11, Ed at 4, and Thor at 8 p.m. Don't forget about stocktradingsimulator.com, our free web-based replay simulator where you can go work on your trading skills 24 hours a day, 7 days a week, stocktradingsimulator.com. If you are interested in trying out BBT chat room, you can use the promo code PreMarket24 when you sign up for the intro membership. It'll give you a discount off the 1 week trial. That is a non-recurring one-time payment. That'll be $24 if you use that code for 7 calendar days, 5 trading days in the room, and still have the option of the elite annual membership with a free one-on-one coaching session with Dr. Kenneth Reed. Just use the promo code REED50 when you check out.
All right. Thank you very much, Norm. All right, guys, let's take a look at what we have here. I was looking at BBBY. They're trying to get going at the moment. So we got a little pop there. Again, in play for sure, guys. We'll see how that does. We have FTSCH as well. Good volume this morning, up 17%. Definitely in play. Piton is starting to drop down a little bit here. Still up 7.7, 3.1. And again, they got a good catalyst. Anytime you put Amazon, you're going to partner up with them. It's a good news no matter what. But we'll see how that's going to play out later down the line as far as bottom line for them. And then here is Oxy, up 1.5. Again, they got great volume this morning in the pre-market, which usually they don't. That's why I like them quite a bit today. Very extended on the daily. I don't know how much juice they have left to keep this rally going. I don't think you're going to get a day like this, but again, nothing in this market shocks me. As far as the daily, we're going to go back. Is this all-time high? Man, that is a fancy way to hit all-time highs on Oxy. Is it? Definitely 52 weeks. Let's go to maybe not, maybe yes. Where's my weekly? Weekly, what do we have here? here. Oh, monthly. Oh, no. We've been up to quite a bit here, 120, 110. So not bad. But I mean, we haven't been up here since 2018. So definitely thanks, Will. Thanks, Jared. Yeah, definitely still a very impressive move this morning. If you look at the monthly here, just look at this thing. Going from we were hanging out at what $9 in October. We're at 74. So insane run. And again, as I mentioned before, take a look at MRO and APA as well if you'd like to trade these energy plays here. All right, cool. Let's see. Let's get some levels in here, guys, and we will start to set this up. We were a little bit early, so if you have questions, throw them out there as we're going to do this, and I'll try to go slow. So I usually tend to speed up a bit, especially this coffee is really good today, so speeding up quite a bit here. But throw some questions out there, and we will try to answer them as we move forward here, guys. So it's not a busy morning, so we have time. BBBY, let's do levels here, guys. Again, this is just it is a great scalping type stock, right? I think many traders trade this as a scalp, and if you get caught in the right side of things, like if it runs, then you can make cherry on top, right? If it goes in your direction. But for me, this is a scalping type sticker. I want to get in and out as quickly as possible because I know it can go against me even quicker, right? So very important when you're trading this thing. What's the float on BBBY, by the way? I always forget. Is it a low float? No, it's not. I wouldn't expect it to be, but 76 million. But again, this is where you just can't go by the numbers, right? You got to look a little bit under the hood and see what's really happening. That's 76. To me, this trade is like a 5 million shares flow, right? Which is the type of volume and volatility that we have seen on this. So you just got to be very careful, right? So here, I have the pre-market 1222. 1223 to be exact. The low of the pre-market is 943. So both of those are listed there for you. I am going to look at higher. We are going to see 1330. We had a level there. And we also had another one at 1530. Again, I'd be shocked if we get to 1530 today. 1330 should not be too difficult, but 15 and above. I mean, we got to go into a major squeeze. I don't think it has this in it. The last time we did this, we gapped up. We ran like this. When was it? Well, we had major gap ups in the pre-market and then major sell-offs here, right? But last time we did something like this where we rallied over a couple of days and we shot up nicely to 30, we just kind of end up selling off slowly, right? And then we went all the way down to $4. So I don't think you're putting in some crazy days on this, but we'll see. This thing has dropped down quite a lot from 28 down to 8. So the drop has been a lot more faster, a lot more brutal than it was last time. Maybe we'll get another pop in here. But next on the list, FTCH, guys. Again, this stock, man, it is just the price action is so weird. If you have not traded this or looked at this before, put it on your secondary and you see what I'm talking about. If you're used to trading like an AMD, like an Nvidia, like an Apple, this one here gets the volume. And I don't know if it's because it's a lower price stock. Again, they got a catalyst. They look good today, but they just trade weird. So high of the pre-market 948, 1115, obviously a good level there. Nice rejection on the daily. You do have an area here where there's a lot of days kind of slamming against each other here at around 996. So if you look at 996, might actually be $10. Got a couple of them opening, closing right around that area. A little bit of resistance, some support happening here. So that could be a good area to aim for if we're going to have a breakout above 948. Towards the bottom here, we got a couple of things happening in the pre-market that actually might line up with our daily. If you look at this 9, well, it's the whole dollar too as well, right? $9. If you look at 9, you see they got a little bit of support happening this morning. And on the daily, you usually lower price stock on that whole dollar. You are going to have some areas where you have some touches. So you can see that here on the daily. And then slightly below that, it's a couple of more days here around 860. You got a few, this is a good level as well. 860, you got a couple of things happening here. Some wicks slamming there. You got some days opening around that 860 as well. A lot of support and resistance across the board on the daily. So you might want to mark that down there. Early on this pre-market, we saw some activity here around there. But again, not a whole lot of volume. So I usually don't put too much weight on that. But you got your daily confirming what's happening there. Here's P-Ton, guys, up 7.7, just kind of hanging out here. This is good. This is what you want to see. You want to see a hold here. You want to see this come back up to 1250 and 1225. If it does that, this is going to be a monster today. But we got to see it hold here. So the initial reaction, right, always it tends to be an overreaction. Now you got people's attention, right? We'll see if the volume can continue to come in here. So right now, sitting at a high of the pre-market is over at 13 at 19. So that is very nice. We'll throw a level there, and you can see how that's reflecting a little bit on the daily here. But the actual daily level, it probably is 1376. That's a good area to aim for if we break out of this 1318. Towards the bottom, we do have 1272 as well. You can mark that there. And then you have plenty of highs and lows from the last 2 trading days, doing a pretty good job below that previous day close, that 1172 as well. So you're set there. And looking at Oxy now, Oxy again just ripping at 52-week high, not the all-time high, but definitely is up there. 75.81 this morning. I'm not gonna go back and look at levels from 2018, right? I want to see a breakout here. I'll start looking at the whole dollar numbers, but you can look at it. You know what? We will. Let's do this the right way, right? Let's look at our weekly. We can look at our weekly. And we can zoom into 2018, a little bit of 2019 maybe, and you see you have some areas here of support and resistance. So right now the 75, man, I think it's hitting it right on the number. 75.81, yeah, 75.81. You can see right there, you got that support happening on the weekly. That's slamming against that nicely. If we're to look above this, if we're going to do a nice run here again, as we have the last couple of days, we're looking at 77.95. And you also have another area right here of support and resistance around 80.12. So I think that's good enough. But what the heck? We'll put 82, 90, 92 there as well. And here's the reason. So you might wonder, why am I not selecting these bottom wicks here? Right? You got a couple of bottom wicks there. Well, I'm looking at the most recent area that we hit that, right? This is the most recent time we hit this price. So I'm gonna prefer, or I'm going to prioritize this here opposed to these wicks here, right? And if you look at it really, 82.92, you also got a bit of support happening there as well, because you got a lot of these opening and closing right around there. So it looks like during this stretch here, which is a couple of months, obviously, you were down, but managed to get back up to 82.92. You see all these weeks closing at that time, at that price. So I'm going to prioritize this here above these wicks that are happening down here. They're closer to the price action. So you always want to have the latest levels if possible. So that's good for Oxy. Towards the bottom, plenty of highs and lows are doing a good job, but plenty of support on the downside as well, because you've been trading the last couple of days moving nicely. One thing that the highs and lows are not covering is going to be this 72.45, right? So because we just passed that day, but that is worth noting there, because that's going to be a good level if we do decide to drop and smack down here. Okay, we are set here, guys. Only 4 tickers today so far. There are some good possibles. We have Twitter, which can be nice if it can get going. Volume is extremely light right now, but the daily is very good on Twitter. Let's do levels for this just in case we are ready. 39, clearly a level. We had the ping pong action happening here between 39 and 39.85. And below that, in case we are going to flush here, we do have this level here. It's a decent one, 38.23, but the major level is going to be this one here, this 37.17. You can see the support happening there nicely across a couple of weeks there. So that is looking pretty good. Outside of that, I think we are set for today. XBEV, let's take a look. XBEV, what do we have? XBEV right now, pretty flat for the most part, so not doing a whole lot. But again, big drop yesterday, gap down and sold off nicely, and it traded very clean as well. Maybe it's a possible for sure. I don't think it can go on our main list, but we'll have to see if it's like you said, very weak at all time. It's an all time low, really? No way. No, not all time low, is it? Oh, I thought it would have been lower in here, but I guess not. It's interesting. Oh, I don't know. 52-week low, but no, yeah, we got some stuff happening here. Well, we're going back now quite a bit, 2015. But yeah, the 17.12 is your all-time low there. But I still agree with you. We still have not been down here in a very, very long time. So Still agree that's still a significant level there, because last time we were here was in March, and you saw the bounce we had there. We had a bounce also, sorry, May, and then we had a bounce in March as well. So it could be interesting as we're sitting at an area where maybe they can be finding some value, right? Can kind of get a pop going. So, yeah, but maybe a possible, and that might not happen today, right? That might take a bit to happen, to take place. We'll put it as a possible for now. Yeah, daily looks good. I mean, we've been dropping very nicely on this, right? With some increase in volume. Obviously, yesterday, they got crushed a little bit here. So yeah, it does look good. Okay, what else, guys? What else you guys like this morning? Any questions so far? Zoom near 2-year low. Yeah, near all-time low for XBEF, correct. Yeah, Zoom, again, guys. I mean, it's just, I look at Zoom and the market open for this. It's probably not going to be as bad this morning, because you're not going to get this gap down and indecision. Okay, are we going up or down? But this was brutal here. You got to make sure you survive this when it comes to Zoom. After that, traded extremely well. Beautiful drop here. I mean, this was so clean. Yeah, might be worth looking at it this morning. Volume of 145, which is it's typical Zoom. They don't get great volume on regular days, right? Obviously, yesterday they had a good volume in the pre-market. You're not going to see that today because kind of the news is out already. We'll see. We will see. This is better than some of my other stuff here, like JWN, which is starting to drop here, down 15% now. Take that back. It's starting to look a little bit exciting here. This drop is not good, because you already gapped down, quite a bit, and now you're dropping below some of the pre-market lows. Usually, you stick around the pre-market lows and kind of try to bounce from there, but this drop is not a good sign. Yeah, let's put JP Morgan. Not JP Morgan. Excuse me. JWN up on our list. It might be the sleeper for today. This might be the one that might shock us and trade up pretty well today. Let's get some levels in here. High of the pre-market, we're looking at 2032. There we go, 2032, the low of the pre-market at the moment. We are looking at a 1940, so we'll slam a level there as well. And then right over here, guys, you got a couple of things happening here. That's your high of your pre-market. But right below that, around at 2005, you do have a great area of support. I mean, we had tons of support here. We actually bounced from here after dipping a little bit lower. So you definitely want to have that down. And that is what we're trying to hold this pre-market, that 2005. We're trying to hold there. It looks like after hours, that is kind of where we found some support and kind of say, okay, it's a good spot to kind of chill at. But this drop here is interesting, and let's see if it's going to continue to go here. That would be fun, not for them, but for us. And yeah, so if we were to lose this 1964, what do we have? Well, okay, we have another one here. It's going to be 1940. Excuse me. It will be 1873. So that's good there. Jeff, agree. Can I agree more? BBBY and Piton on deck today. Both of them can looking very good this morning. Here he goes. Piton trying to get going. It's going to be fun today, man. If they can get to 1272, they're going to be fine. I know Norm has a good entry somewhere in here, as he called it early. So he's in really good shape on this trade if we can get going back to 1272. And I won't be surprised if he's partial out a couple of times. That's a very, very nice pop there. All right, folks, not a bad day, so far, or not a bad morning. As far as moderators list, I only have Peter's. I see Thor's just came in now. Excellent. So we got a couple of things happening here. And no IPOs, no SPACs, Peter is reporting. If you haven't done so already, guys, I forgot to give a shout out to Jared. Jared kind of giving us some good information about options and the costs and puts. And I got a great thing about YouTube is it's recorded, so you can go back and look at the stuff he was telling us, because man, it was a lot of great information. And don't be shocked if you cannot take it all in one shot, right? You gotta kind of go back. This is there was some very in-depth stuff, which again makes me want to trade options. So shout out to him. Thumbs up over on YouTube. We appreciate it very much. And then we will get our moderators list going here. So let me go ahead and remove the video, and we will bring this over. Yeah. Shanna, if I hope I'm pronouncing that correct, Shanna. It's a lot of great info. It's a lot of great info. And again, I know nothing about options. Well, I knew nothing about options. I don't even know what a call and a put was, but with Jared and Artie, putting some material together and always kind of talking about how we could even use this, to kind of figure out how the day trade can go, right? How stock can move, the value and things like that. Intrinsic value was a conversation today. A lot of that, the deltas and all this good stuff. I have learned quite a bit from these guys, and that's always nice. All right, let's move this over here. We'll wait for some of our moderators to kind of throw some stuff up there, and we will get our show ready to rock and roll, ready to go live here. So, right now, as I mentioned before, Peter, so you're looking at AMD, Apple, and Piton. Secondary list, FTCH, BBBY, and SoFi. Thor looking at Nvidia, Twitter, Piton, and BBY. And I think today we're going to have a very similar watch list across the board, right? Because there's not a whole lot. We don't have a ton on our gap up list or gap down that looks great. But the ones that look good are very, very they stick out, right? Piton sticks out, BBBY sticks out, and some other ones that are on here that have great volume. All right, wait for some other moderators to throw out their list. There's Megan. She's looking at Oxy, which was incredible yesterday, and the volume today is looking very good. They got 630,000 shares traded already. This is good volume. Let's look at this for a second. So if you look at Oxy here, I mean they are trading nice. They're dropping, but it doesn't matter for us. We can trade either way, right? We do have shares for sure on this one, which we usually do, which is nice. So yeah, this could be a good one today. Not sure what to expect. I'm trying to not have a bias, but kind of have a thesis. Are we selling off here or not? But it can go either way, although it's selling off a little bit now. MU, Megan, you're looking at MU. We'll look at that in a second because we have not traded MU in quite some time. Susan will be looking at NVIDIA and Twitter and still looking for other opportunities as well. 9:15, we'll wait for more moderators and also wait for Brian to get his list going, and then we'll hand it off to him as well. Today is what, Tuesday? No, today is Wednesday. Okay, Wednesday. So we got a couple of more days of trading here. What we got here? SPY, the Qs, very good. Okay. Jairus list, Oxy, BBBY, Piton. Again, three that are really good this morning. Secondary list, NVIDIA. Reminder for those that missed it earlier today, you do have earnings tonight. So we'll see how that's going to play. A little quiet right now, but I have it as a possible as well because they can get going. They're going to get the volume they usually do. We'll see leading up to earnings how that is going to be. Twitter's on my secondary. They don't have volume, but they're looking good on the daily. They're sitting at a nice area of support. So maybe not right at the market open, but maybe later in the day they can get active. And remember, guys, you don't have to trade the first 30 minutes and be done with your day. There's other opportunities throughout the day, especially with the way the market is now, where there's not a whole lot that moves. And you see some of our tickers yesterday as we went through them. You had stocks that the first 30 minutes to an hour were just brutal. You could probably find some scalping opportunities, but they were brutal if you're looking for a breakout of the high of the day, opening range breakup on the 5 minute. You didn't get many of those. The ones that you did get got to extend it very quickly. You can wait. You can wait for your setups. There's opportunities that happen even later in the morning, later in the day. So be patient with the type of your type of trading style. And Peter is a good advocate of that. To that, my best trade of the day, and he's screaming here with caps. My best trade of the day came at 3:30, which made I made live in the room. Perfect, excellent. Yeah, no, Peter, I know you trade well in the afternoons. Peter, I see you trade Microsoft like 5 minutes before the close. So you went on a stretch where Peter was trading Microsoft. I think almost every day, like the last 3 minutes before the bell and he was just crushing. Like he had this thing like this is what it's going to do. It does this thing every day, and he just kept doing the same thing. It's just crushing it. So Peter's a big advocate of trade, looking for opportunities the entire day. Here is Brian TRQ JWN Piton TRQ again. He likes that twice there quite a bit. SBLK, we did not see that one, but that is Brian's list for today. So guys, there you have it. Thank you so much for joining us over on YouTube. How many likes we have on YouTube? Did we hit our number? What do we have here? Hopefully you guys helped us out there. 168. Ooh. Okay. If we can get to 200, maybe? I'm not even gonna ask for much. 200. I would highly appreciate it. Brian, we're ready for you whenever you are. You can hop on and kick me off. And guys, have an amazing day over on YouTube. Thank you for those last minute likes there. Appreciate you guys doing that. We're at 194. Um, and we appreciate that. Good morning, Brian. How you doing today?
Hey, good morning. I'm good.
All right, excellent, excellent. All right, guys, I am going to hop off. I'm going to hand it off to Brian. Have an amazing day over on YouTube. We're going to continue here in chat. And if you ever guys want to check out our chat room, you can use a promo code PreMarket24. Head over to our website, bearbrootraders.com. You get access to 2 different chat rooms, the main chat room and Ed's chat room. And I guarantee you're going to have a whole lot of fun. And aside from having fun, you're going to learn a ton. So take care, guys. Stay safe, and I will see you guys later.